good morning, good evening, good afternoon, whatever time you're watching this. Sorry, it's been a little while since I posted. I've been moving around, been getting my stuff situated, moved from Houston to Arizona now. So now I'm back, so I'm happy to see you guys. But pretty much in this video, I'm going to be going over just a quick, short, sweet video, just briefly going over the whole market and why I am anticipating. A lot has happened in the last 2 weeks, so I'm going to try to keep it as concentrated and short as possible, and then I'll go deeper into my analysis on my other videos. All right, first things first, let's go to the VIX. So the VIX, actually, we had a significant pullback. We didn't end up tapping this red vector candle, but overall, this is on the weekly time frame. On the daily, it looks like a much deeper pullback, almost like we broke structure. We're trying to trend down, but we're still on the uptrend. If we start accepting underneath the 50 EMA, if we start trading underneath the 50, sorry, a little zoomed in too much. If we start trading underneath the 50 EMA, then we could safely and recover some of this vector. We can safely start assuming that we're going to start coming to this recovery zone first before we go higher, because at the end of the day, even though, yes, if I'm going based off the way I trade the VIX, then I will start going more long on the stock market, which I know right now the stock market is doing really well. But due to what's going on in the world, especially, the only thing I'm focusing on right now is the interest rates. I don't really, yes, I'm paying attention to what's going on geopolitically, the oil and all that good stuff, but right now the interest rates is what's keeping me, what I have my eye on, really. Okay, so overall, I think we're gonna come to the 50, accumulate a little bit, and then go higher, pretty much meaning that on the stock market, you see it's going higher, I don't think that we are gonna continue its all-time high, its trajectory. Maybe we start making a bigger range and we start going sideways, that is the best case scenario, honestly. But anyways, so pretty much I am anticipating we're gonna come pull back, accumulate here, and then come recover this red vector recovery, especially with it's not looking like we're gonna get any rate cuts until December, and that's even a maybe, so there might be this whole year no rate cuts. All right, going over to NASDAQ, as you can see, we have a lot more distribution volume, as in when price is going down, there's been a lot more above an average volume. This candle was above average, of course it was up candle, and this one also was a above average, but just barely. So a lot of times when you see moves like this, if you want it to be kind of confirming that's going to go higher, we need these candles to start surpassing this volume. And let's say once we surpass it and we start getting that pullback, and on the pullback we need to see a slowdown in volume, just like this, a drop. We had a big drop, big buy volume, but on the way up we had a slow down, pretty much indicating that are the participants already bought here, and now there's not a lot of participants playing here. So if there's not a lot of people playing in this range, then they need to put price where it's interesting. And that's why when you start getting higher to these all-time highs, when retail starts to buy, and you could back this up with this chart with the smart money, dumb money. If you go back in time and go during those times, smart money was always selling and retail was always buying. So since there was no participants in this move, price had to go somewhere where it was gonna activate participants, pretty much. So that's what we need to see. We need this volume to continue higher, as in indicating that people are participating in the buying. But even we look at the sentiment trader, the smart money is trending down, which they are actively selling. Retail is actively buying this rally. So just be careful. It is a strong move up. I can see us kind of breaking out of here, like maybe like S&P the highs again, and then going back down. Do I think we're gonna take this low? Is this the low for NASDAQ or the S&P? They look similar. I don't know. I can't tell you that far off, but so far I'm going based off geopolitical, what's going on, going based off interest rates. Interest rates are still going to be held, guys. So not saying it can be possible that we could go higher, but do I think it's going to be a strong explosive move up like this, where we had a gain of like 15 to 20% from its highs? Probably not. We could probably get like, because this is a M formation right here, We do have an M break. This could be the retrace to the continuation and then start the cycle down. Okay. Moving on to gold. So gold right now, the only thing that's saving gold, that's only keeping this up, is the conflict around the world. Because in these current times with the economy and the rates and inflation and all that, if we had all the same economical struggles right now without the war, gold would be already breaking down. Gold will already be underneath the 50 EMA. Okay, we had this low, we SFP'd it, so now this would be our new low, our new invalidation low, which is now the 50 EMA. Gold can easily consolidate in this range, which I'm hoping it does. It just keeps on consolidating here and then breaks out a higher. But we'll see what happens in the future. But right now, the only thing that's keeping up gold and silver is the conflict. Because even when we look at the Fed watch, right here, this is for this month, 0 cuts. This is getting higher, looking to increase. And they're talking about in December, there might be a cut. But it's still not much. Just like the high hopes is not really there much. And as I'm looking at this every day, because I look at this sentiment every time when there's news, every time when there's headlines of federal speakers talking or anything like that. And I see more often than not when I scroll through these tabs for the months that the holding to the possible hiking rises more than the possible cutting. And that is not a good sign. That is not a good sign. In my last video, if you guys remember, when I was looking at the Aprils, this wasn't here. The chances of hiking was never here, and now it's becoming more and more probable, which is not a good sign, guys. Okay, so pretty much, if I want to simplify it, if conflict's going to continue, there's going to be no rate cuts. Rates are possibly going to be heightened. Sorry. Then the dollar's going to keep getting stronger, which investors will want to keep parking their money in dollars to gain that yield, which will cause gold to struggle. Gold is not like, it's going to have its day, guys. Gold is going to have its day. But in the back of that, if interest rates are going to be higher, then high risk assets as your stock market, your Nvidia, stuff like that, are going to struggle. And what I mean by struggle, I'm not saying that we're going to have a crazy crash, go down 50, 40, 60%. The best case scenario as struggle is a consolidation. Okay, so even if we go over here, and let's say, like, what I mean by consolidation is like the best case scenario if this happens, because remember, this is going to play out, this is going to take a while for it to play out. So what I mean by best case scenario is something like this. Let's go to like Apple stock, right? What I mean by it is best case scenario is that we stay trading above this value area high. Okay, we just stay trading above here, maybe come down to this, but we just start trading in this range. I do not want, that's best case scenario, pretty much is what I'm saying. I do think we will probably see $200 Apple again if we continue with the direction of what I'm saying, as no rate cuts this year. All right, camera was acting up, but if we continue with the same narrative that no rate cuts this year, even rate hikes, then yes, I could see us going easily to $200, maybe to the POC at 170 or 130. But that's pretty much what I mean. Right now, I'm still anticipating a move down. Maybe actually, in better words, I'm anticipating struggle for high risk assets and the stock market. I'm anticipating sideways movement. That's best case scenario. That's me being hopium. But yeah, if they start hiking interest rates and the war gets worse, oil stays over $100 for much longer. Because here's the thing, the longer that oil stays at these high prices, the more inflation is gonna get affect the world economy. And the more the inflation affects the world economy, the more all over the world they're going to need to hike their interest rates, and that's going to be bad for just the planet. It's going to be a global recession, pretty much is what I'm saying, if it gets worse. So who knows how long this war is going to last? But I mean, even they don't even know. Like I'm not going to talk about politics or what the news are. You guys are pretty much watching it every day, but it's just a bunch of like threats. It's I don't see no calming down in the future in sight. whatsoever, unless America backs down. Do you really think Trump is going to back down at all? No, he's a narcissist. He will never back. He will let the country burn before it backs down. So that's the situation we're in. But moving forward, going into oil, this is on the weekly time frame. So we did have our first weekly close underneath the 5 EMA, and to confirm, or not confirm, but to suggest, usually what I do, because usually the rule is that once you start getting candle closes above the 5 and 13, and they do like the cross, and once they're above the 5, you wait until like 1 or 2 candles to see if it accepts lower, because there's a lot of times where it closes lower and then goes higher, right? Yeah, so to make sure this is not a fake out, I'll wait for the next 2 weeks, probably the end of this month. Let's see how this price behaves. If we keep on closing underneath pretty much $100, if we keep closing underneath $98, it's likely we're gonna go down to $87. And if $87 we don't find support and we keep closing underneath 87, then likely we're gonna recover just this little bit left of this vector candle, which is gonna be around $75 to $70, right? But here's the thing. Do you guys think that's likely? If we were seeing the war slowing down, if we were seeing the war just slowing down, the straight opening up, oil. Look guys, honestly, I'm not an economics expert. I'm just taking of what I know, what I see, and I'm building my thesis around it and what I think will possibly happen. And then I go online and I look up Bloomberg and other experts to maybe back my thought and my logic behind it. So here's my thought and logic behind the oil, what I think is going to happen. They already destroyed a bunch of oil manufacturing that is already going to take 5 years to recover, and it's 20% of the global oil supply lost right there. And the war is continuing. Who knows how much more they're going to destroy, right? Oil tankers are just parked up at the Strait of Hormuz. And remember, it takes a long ass time for the oil tankers to get to their destination. So the longer they're just parked there, the more delay that these countries that bought that oil waiting for delivery are gonna have to wait, and it's gonna cause crazy oil prices, crazy gas prices, because it's not because there's no oil, it's because the delivery got delayed so far back, and now we're running on thin ice, we're running on thin reserves pretty much. So with that in mind, I would think that we will go to $70 if we have Strait of Hormuz opening up, the war is ending, things are easing. But how is it looking like right now? It's not going to ease. And if oil stays at these high prices, I do see us maybe coming down quickly to $80 to 87 to the 13 EMA. Sorry, you guys can't see it, to the 13 EMA, right? But that would be like my last buy position for oil for the rally higher. I don't know how high it's gonna go, but hey, this is very different than any other conflict in the world. A lot of the other conflicts we had like proxies and we weren't this involved, but this is just it's fucking grave, dog. But anyways, to make a long story short, do I think we're gonna come down to 50 EMA? No, based off the geopolitical problems and what's already been destroyed and how long it's gonna take to recover. But best case scenario is that we stay consolidating from 120 to pretty much $74-$75. Again, we can start consolidating, but even consolidating would not be good for oil. Okay, that would be still bad. But yeah, and higher oil prices is going to cause what? Inflation. And that's going to cause what? More likely to increase interest rates. If the Fed wants to lower inflation, they have to increase interest rates. So they just adds more fuel to the fire of no cuts. And mind you, remember, if there's going to be no cuts and maybe even hikes, the stock market and high risk assets are going to struggle. Period. That is just how money works. That's just how that's just how investors view perception of value. Okay, higher interest rates, I'm gonna get out of high risk assets, go into my dollars, go into my forex, buy bonds or whatever, low risk assets. And we're just building the perfect recipe to bring more value to low risk assets, pretty much. All right. Let's see, tomorrow we have core PPI and PPI month on month. So here's the thing, this just tells you like the price of goods and services. This is telling you that the American economy is getting work. But the issue with that is that a lot of this work is being done with AI. So even though, yes, American economy is getting more orders and they're producing more, but it's not going to the average person. Most of it's being done by AI, like I said. And most likely, this is going to keep going higher, which I think the past few months has just been going higher and higher, indicating that American economy has activity. Okay. But all that I said, one other thing you guys need to pay attention to: the dollar. Look, the dollar, oil, when you take profit on your assets, just like in crypto. The reason why I look at USDT dominance is because when people take profit on crypto, they convert it to USDT dominance for the most part. In the financial world, people take most of their profit in either their native currency or in dollars, if you like it or not. So the oil prices are also, oil being higher is actually good for the dollar also, because when they are transacting and to buy or sell oil, they're transacting in the dollar as far as we know right now. This things could change in the future. So when you look at this on the weekly time frame, this is a clear accumulation. One tap, two tap, three tap, and dollar's gonna get ready to break out of here and possibly go back to 104 to maybe 107, back to forex intervention levels on the Japanese yen. And remember what I was talking about, the Japanese, so I could see us with all this going on and everybody getting out of the stock market, because if the stock market is rising right now, if retail's buying this, technically, if you look at the smart money and dumb money chart, smart money is selling into retail. So if smart money is selling this and retail is buying it, then when the smart money takes profit on their assets because they're selling it into retail, they're going into what? Dollar. Okay. So yeah, the dollar keeps going higher, then that means gold is going to struggle. High risk assets are going to likely struggle. And interest rates are going to keep being held. Period. But all right, moving on to crypto. I'm just going to do USDT and Bitcoin. I'm not going to go too deep. That's going to be on my later videos. I want this video to be short and sweet. All right, so USDT, we are clearly here making an M formation. This is a clear as day M formation. So now when you got close underneath here, break, retrace, level 1, level 2, and level 3, and hopefully is the bottom, and go higher, okay? That's pretty much what we are looking. But this is an M formation when you close underneath this low again to confirm the M, and now we are targeting 6% pretty much. But new invalidation for the upside, because right now I am bearish on USDT, but meaning bullish on crypto right now. Invalidation for the short-term, midterm bearishness of USDT is a close under. Jesus, I don't know why that keeps happening. My camera fucked up again. But anyways, get above 8.269, then yes, I'm getting the fuck out of crypto, because we have ugly highs, and yes, we're gonna come take this all-time high. Easy. And that will be likely Bitcoin making a new low. So I'm anticipating we're actually gonna go down and then make the new low. How is that gonna look like on Bitcoin? This is how it's gonna look on Bitcoin. Right here, we are finding support on the 200 EMA. We have a W formation. So now we gotta close above 76K. As you can see right here, we have a W formation. Where the fuck is my tool? Okay, W formation. Boom, 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 boom. We got a break here, come to the 50, retrace, continuation. But this is what I'm anticipating. I think that we are gonna mean revert back to the 50 EMA. I think we're gonna mean revert back to the 50, maybe to 90K to possibly up here, and then make a new lower low. I don't think this rally is gonna take us to recover this vector. Best case scenario is we recover this vector at 110K. And you might think, well, we're at 110K, why won't we go to the all-time high? When I'm thinking about it, what will be the move that will wreck the most amount of traders? I believe, look, everybody right now is very bearish. Nobody's buying in these ranges. Of course, I'm buying, but for the most part, retail investors are not buying. A lot of people are not participating in these lows. but everybody wants to go lower. So of course people will anticipate a rally higher, right? But I feel like a rally back to the 50, sorry, a rally back to the 50 is a little bit too obvious, and people will be shorting the hell out of this. If I'm a market maker and I'm trying to fuck as many traders as possible and make as much money as possible, what would be the move that will catch everybody off guard? I think breaking above the 50, breaking above this high at 98k, and possibly touching 110k. I think when we get there, everybody will switch their bias as bullish, 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 because even right now my bias is still we're going to make a rally to go lower. And I think a lot of people have this bias, but I believe that if you reach 210k, everybody will say fuck this bias. This is going to be the move to all-time high. We're just going to get a retrace and a continuation. So yeah, I think that obviously I am targeting 86k, 86 to 87, 97k, and then last target is 110k. I'll be building shorts to go lower, okay? And right now we are currently in the good news is that we are currently in a cycle pattern right now. If you know anything about the cycles, actually let me turn all this off so it'll be easier to see. Let me turn all this off, boom. Oh. Okay, so what I mean by cycle pattern, I have it on my Twitter. We have a M formation, drop, retrace, level 1, drop, retrace. Let's say the retrace is right here, level 2, and then on the third drop will be the level 3 W formation, and then continue the cycle to the opposite side. Okay. But yeah, I hope you guys enjoyed. I hope the video was short and sweet. That's around like 20 something minutes. But yeah, so overall, I'm not too bullish on the stock market yet. I do think we have a little bit more upside for the mid to short term. Now for the long term, I think in long term, we're gonna, best case scenario is chop sideways. Oil, I'm still building my oil trades. I'm still trading oil. As long as the conflict continues and there's no signs of them building more refineries or continuing the flow of oil to the world, then the price is gonna stay higher. The dollar is gonna blow out of that current range that it's in. And interest rates are not going to be cut, most likely held. And if they raise interest rates, yeah, the stock market and high risk assets are going to struggle majorly. The dollar's going to do well. And yeah, so overall, still cautious. For me, if you want to know my trigger to when I would be like, hell yeah, bullish, bear market, bear market, bull run time. Obviously, war over and all that, but whatever. Eventually, the war is going to be over. But economically speaking, what are the signals that I'm waiting for? Until the Fed says, all right, we are going to start cutting again. Or if they raise interest rates, when they say, all right, we're going to stop raising interest rates, cool down, and then when they start talking about we're going to start easing again. Right now, we are in a tightening phase. They're holding and possibly going to increase. So they're tightening liquidity. The only signal you need to wait for is until the Fed starts saying, hey, we are not going to tighten liquidity no more, and we're going to start easing. And that'll be my signal to get into high risk assets heavier and start investing more into the stock market and all that. I'm still investing in everything. I'm still investing slowly in the stock market. But what will be different with my behavior when I get that signal is that instead of putting 5% here, 5% there, I'll be going in 10, 15, 20% on the buys. But yeah, I hope you guys enjoyed. Happy to see you guys again, and you'll be seeing me more often. Enjoy your day, and let's see how this plays out, bruh.